In the FX market, there are countless of opportunities. Some are winners, some are going to be losers. And in this video, I will do a quick trade review and show you one of the trades that's probably been the best trade of the season. It's been a trade that I took on my own personal account. And I'll walk you through the steps. I'll do a top-down analysis and really explain why the setup was so good. And towards the end of the videos, you will also learn what the realistic expectations are for you to trade and know what to expect. All right, so let's start here in the chart with a top-down analysis. This is a trade we took here. Let's remove all those lines for now. Let's get rid of the bid and ask price lines because we don't need them. Also, as you can see, the price is not moving because this video is being recorded on a weekend, and on the weekend, the FX market is closed. All right, so let's delete our trade history as well. Get rid of those lines. Get rid of them, clear this up so I can really explain all the different price levels, and you will see what the analysis, what the idea and anticipation of this move was. So we'll start on the higher time frame. I'll look at this on the daily time frame. On the daily time frame, we can see we had a very nice range to the left here. We had a big sell-off that has happened earlier. If you look at where it has started, this bear candle opened at this price level up there. We have a clean range, no interruptions, no resistance, support levels in there. Then price later on has started to move bullish again. We can see this very strong bull candle here to the right. And at the top of the candle, the high of the candle is going to be an interesting price level. We will mark that for now. And we'll also mark the close of that candle. Now, if we go down to the H4, to the 4-hour time frame, we can see again price has moved up. We had a bullish move up here. We had a little bit of a pullback, some consolidation. We'll mark this level here as well. So we have a little bit of a support area. Now if we go down to the 1-hour time frame, on the 1-hour time frame we can zoom in a little bit. We would adjust that level, mark the support, because at the time of the price consolidating here, this is where you would put your support level. We had a strong bear candle, price started to move bullish. We had quite a few good rejections. We had another retest of the support. And then here, the bull started to pick up again. You can see we have a resistance level there. Now if we go down to the 30-minute time frame, let's take a look at this on the 30-minute. So on the 30-minute, we again have this resistance level here. We could move that a little bit up. But what the main point is we have to pay attention to this high. So this is where my focus was on at that high, because if you remember on the daily time frame, that was the high of the candle. So the way the market moves is once it's breaking the high, there's a very high probability that this move will continue up. We had a nice bullish consolidation here. Now if we go down again to the 30-minute and 15-minute, now the question is at what point would we get in this trade? And if I turn on our trade history, you can see I took a buy as soon as price broke this high. You can see just a couple of pips above, took a long entry. So on the 1-hour time frame, the stop loss I placed below the low of the previous candle, just about there. And it's been a very big move. So you can see price started to move bullish. This is really where the market is going to test your patience. Stayed in this trade for a couple of hours. Price is still moving up. And then up there, started to secure some profits in this area. Now, if we take a look at how much price has moved up 477 pips to the first target. So the risk reward ratio has been extremely good at that point. Now, if we look again to the left, if we move over here and scroll to the left of the chart, you can see we have a very nice range up. This yellow line has been the resistance we saw on the daily time frame. I placed the take profit a little bit below the resistance to make sure we're getting filled. Now if we measure this entire move from the beginning here where we took the buy, we got out up there 671 pips. This has been an extremely good move. Price moved exactly as anticipated because there was a very high probability price will move up to this resistance zone we had on the higher time frame, on the daily time frame. We've also seen this on the 4-hour time frame. If we go to the left, you see the range is extended a little bit on the 4-hour, but this is going to be the target based on the daily time frame. This is going to be a price level of interest. So there was a very high probability of price moving up there. Now as the prices moved up there, we got filled, and you can see price barely moved higher up, so we were really able to capture that top. And now it's important to set realistic expectations, because trades like this don't happen every day. Being able to capture over 670 pips in one big move, but they certainly do happen if you are consistent. They do occur. Those moves happen, and you will be able to capitalize on that. But you have to also put enough effort into learning price action, practicing trading, really going through the education and making sure that you know what you're looking at. If you're looking at a chart, you need to be able to read the candlesticks. The market is always speaking to you, and it's about learning the language of the market. You can also see that once price has reached our target up there, I've gotten filled, that we had an immediate sell-off, price has reversed back down, and that was actually, again, a very predictable move, because it's retesting this previous resistance and turning it into support. Now let me also show you a screenshot I took of this trade that happened during the move. You can see here is the entry where I took a buy. Price has moved up. This was at the time where I secured profits, was about 80% of the position, and the take profit level is set up there. So this is a good example that really shows what's possible. Of course, it's given that you learned how to read the markets, how to trade price action. You can also see I'm not using any indicators at all. It's only about reading the candlesticks, understanding the market behavior and the psychology behind it. This price action trading is also what I'm teaching everyone in the mentorship program, what we're using at our own proprietary trading desk here at CPP Trading. And you can do the same. You just have to put some effort into learning, practicing, and dedicating yourself to becoming an expert at price action. So I hope you liked this video. If you found this helpful, please like and subscribe. Leave a comment in case you were in this trade as well. You were able to capture this move or a portion of this move. I would love to hear that. And we'll see you in the next video. Take care and trade safe.